It's the 7th day in the 7th month and the last but one in this week for our business journey this week. Welcome to Business Morning live on Channels Television. I'm Ini John Mekwa. Well, let's start with what's happening in Nigeria. The value of solid minerals imports rose by 74.39% to 41.09 billion naira in the first quarter of 2022. And that's coming from 23.56 billion naira in the same period of last year. This is contained in the latest foreign trade statistics report released by the National Bureau of Statistics. Finding in the report indicates that solid mineral imports were dominated by plasters of calcium sulfate imported from Turkey worth 6.87 billion naira and China valued at 1.87 billion naira. Other products imported under this category were salt for human consumption from Namibia worth 5.87 billion naira and gypsum from Spain worth 5.72 billion naira. Still in Nigeria, Dangote Cement PLC has unveiled the Season 3 goodies bag consumer promotion expected to create 125 millionaires monthly and 25 multi-millionaires with over 1 billion naira cash prizes to be won in the next 16 months. The event's launch held in Lagos and marks the official opening of the promotion. The leading cement company says that the credibility and transparency of the promo has never been in doubt.
It's Season 3 of Dangote Goodies Bag promotion. And according to the leading cement company, the promo is offering life-changing prizes expected to boost the economic well-being of the brand's loyal customers.
That will be the first time that I will ever receive the sum of 1 million naira in my account. So,
The Group Managing Director, Dangote Cement PLC, says this series is designed to give more value to their customers.
Dangote Cement Bag of Goodies Promo Season 3 is here to serve triple purpose: to allow loyal customers of our products continue their projects, stand a chance of becoming millionaires, and have the capital to extend their businesses.
There are different categories and various prizes up for grabs, but first, the unveiling of this season's package.
Don't sleep, wake up.
Regulators from the National Lottery Regulatory Commission, its state counterpart, and Consumer Protection Commission are present at the launch.
The essence of we being here is to ensure transparency and integrity in the course of the promo. What I mean by that is that what the Dangote Cement says they will do is actually what they do. When winners win, they get their prizes.
Winning process is buy Dangote bags of cement. We have Falcon, we have 3X, we have Blockmaster, all quality products. When you buy the bags, open them up. In every bag there's a scratch card. Bring out the scratch card. There's a panel at the back of the scratch card. Scratch gently. It will reveal your price. Then you go to the redemption center to redeem your price. Then for mega or for star prize, you have to collect DANGOTE to spell Dangote, because the theme of the promo is spell Dangote and be a millionaire.
The management of Dangote Cement PLC says it will continue to provide economic benefits to local communities with efficient production and keying into strategic growth markets.
Welcome back. Well, let's leave Nigeria just for a little bit. Oil prices globally now regained some footing on Thursday after steep losses in the previous two sessions as investors returned their focus to tight supplies, even as fears of a global recession persisted. Brent crude futures rose 16 cents to $100.85 a barrel, while WTI crude futures climbed 18 cents to $98.71 a barrel. Prices swung between $2 in losses and gains of nearly $1 in the volatile session. Recession fears continue to grow and continues to raise some concerns for the demand outlook. However, supportive fundamentals should mean that further downside is relatively limited. Washington tightened sanctions on Iran yesterday, pressuring Tehran as it seeks to revive the 2015 Iran nuclear deal. Well, let's drive down on that with Longida 4, analyst with Financial Derivatives Company. Longi, good to have you. Good morning.
Good morning. Glad to be here.
Yeah, so we thought that oil would just continue going more than $100, but we've seen it taper now. In fact, some analysts are saying it's going to hit $65.
Yeah, it's really a battle between the bears and the bulls right now on the oil market. Yeah, and the main things actually, of course, are recession fears. As we know, inflation has been on the rise, and global central banks have been tightening monetary policy in order to meet and curb inflation. And what this is doing is that it's created a fear of a possible slowdown in global demand. We know our U.S. interest rates now rose by their highest level since 1994 by 75 basis points. And yeah, what this is really doing is it's causing fears of a possible decrease in economic activity, decrease in business activity, as firms find it harder to access capital and so on. So this is really weighing down the oil markets. And then, of course, add fears of COVID-19 lockdowns in China, the world's largest oil consumer.
Yeah.
And you have a very, very, very mixed bag.
Yeah, so central banks are tightening monetary policy, increasing interest rates. Is it actually dealing with inflation? Is it actually doing anything?
So it's actually, so in the indirect sense, you could say yes, they are reducing the amount of liquidity in the market. So yeah, that should theoretically, of course, help to theoretically exactly help to theoretically bring down inflation. But then what we've noticed is that this inflation seems to be more on the cost push side of things. So it's due to increase in global prices. So the surefire way to bring down this type of inflation would be to increase supply of goods and services, the staple goods and services.
And that is being disrupted by the war
and
high costs and energy costs and all of that at this time.
Yeah, it is very dangerous. But we're starting to see supply rise in certain key commodities, and this should help to taper inflationary pressure as we move along in the year. Yeah.
All right, and still along that line, though, coming back to Nigeria, what does it mean? We are oil producers, and it's supposed to be good news to our economy when oil prices rise. And so now that it's looking more like tapering because of the fear of recession, it's supposed to be bad news. But is it really bad news for Nigeria?
It's not bad news, actually. And the key reason for that is, of course, subsidies. So as we know, Nigeria pays a lot in subsidies. I believe 4.9 trillion is the amount of the budget deficit that we're currently 4 trillion that we have, the budget deficit, because of full subsidy payments. So what is going to happen now, because we're seeing oil prices taper, this will reduce the subsidy cap, the amount of subsidy payments that the government has to pay, and this should hopefully free up more money for infrastructure and development.
Hopefully, because even before now that we had less to pay for subsidy, we didn't really see the infrastructure. And I heard somewhere that the federal government might be thinking about going back to that Euro bond, that was suspended. It's not even up to a month yet.
Yes.
The Eurobond thing, because of the cost. We have riskier bonds now, so it's going to cost us even more. And then with the hike in interest rates, it's going to be more for Nigeria.
Exactly. It's not just Nigeria. Ghana recently walked back on their decision not to tap into the international Eurobond markets. So I think it's sort of a trend in African economies. I think as oil prices taper, the African economies might start to think, okay, maybe it's not such a bad time for us to tap into the international capital markets.
Yeah, and I saw somewhere that Zimbabwe are selling their gold.
Yes.
We know Zimbabwe has been in a dire economic situation for a while. But, this also paints the picture of stagflation, not just inflation, and not just for a particular country now, globally, is a threat.
Exactly. The UK, especially UK, is one of the countries at the highest risk of stagflation right now. We know the GDP growth in the UK has been slowed in the last quarter. Meanwhile, inflation has been on the rise significantly there. I think highest level in 40 years or so. So yes, stagflation is a major risk. And we know the UK is a major superpower. And this is going to affect African economies, of course, through issues such as remittances. We know the UK is a major provider of remittances to these African nations. So that is going to be a very big problem.
And even in the area of import bill is really going to affect African countries, because a lot of African countries are very import dependent in consumption. Yes. Unfortunately, we're talking about the UK. I know that, but you know, it's a very dramatic scenario in the UK now. I wonder how all that is going to affect the economy and how long it will take them with the call for resignation, and the resignations already.
Exactly.
And you know, I just wonder how it will affect the economy. But I mean, we'll talk to our correspondent there later on today. But what's going on with coffee in Africa? Tanzania is auctioning. Exports in Africa is reducing. What's wrong?
Yeah, so exports in Africa fell by about 0.8% in May. Exports from Africa, so it fell about 0.8% in May. And the main reason for this was because Uganda, which is the largest, currently the largest African coffee producer, recorded a decrease in production by about 7.5% in May. And this is, of course, due to unfavorable weather. So there's been a drought going on there, and this has really affected their coffee supplies. Yeah, but then we have seen coffee exports rise in places like Ethiopia, up maybe like about 16% or so year on year. So there is definitely still some upside there. Yeah.
Interesting for Ethiopia, because they are dealing with droughts now.
Exactly.
In fact, I heard some children are dying because of lack of food.
Because of lack of food, the ongoing hunger crisis.
Yes. So interesting that they have an increase in their
coffee exports. Yeah, exactly. Speaking on the hunger crisis thing specifically, we are actually starting to see signs of that abate, especially because palm oil, which is the most widely used cooking oil in the world, has actually fallen. So Indonesia has eased its ban on palm oil, and we're also seeing palm oil stocks rise in Malaysia. So this is helping to reduce the record high levels of palm oil prices that we've been seeing. So yeah,
our country is done with food protectionism. I know that's what they were doing at the peak of just about a month ago.
Yeah.
A lot of countries were just protecting their borders and trying to take care of local demands and not allowing crops and food to go out.
Yeah, I think part of it can also be attributed to the stark decline in oil prices that we've seen. Because as we know, the oil markets are correlated to almost everywhere. So now that we're seeing oil prices starting to taper, this is sort of easing the pressure of these economies and allowing them to, okay, we can open up our borders once again to export. And of course, this is helping to calm global food and food crisis inflationary pressure.
Now, what I really hope for is with this decline in oil prices is that it will affect diesel, because that has affected a lot of things in Nigeria. It's partly connected to the long queues that we see at filling stations in most states in the country. So if it reduces, even the aviation fuel, I mean, the aviation sector have threatened to shut down for a while. So I do hope it will spill over to that area
diesel,
too.
Especially, the diesel issue is a very major problem. It ties into almost every industry, almost every living cost and so on that we're currently experiencing. So we do hope that we'll see a tapering of that in the near term.
And then cocoa prices fall in Nigeria, in Cross River, Edo. And
Yeah, so the main factor there is, of course, weather conditions. We're in the raining season right now, but then unfortunately areas like you've mentioned aren't seeing these high increase in rain, aren't seeing enough rains. And this is, of course, sort of stunting the development of these cocoa beans. So I believe about 300 beans, the average now they're seeing for about 300 beans is about 260 grams or so, and then exporters and buyers usually prefer 280 to 285. So the lower quality is what is sort of dampening these cocoa prices.
But grains are still on the increase. Yeah, I guess it's connected to the war.
Yeah, connected to the war.
Because the two giants or grain exporters are distracted at this time.
Exactly. No, but we are starting to see some relief in that area. So U.S. has reported a strong harvest, and I believe USDA data is coming out later this week or later this month. So that should help to show some upside in the grains department, and we should see more tapering in terms of wheat and corn.
Is that why Bloomberg is reporting that they're going to be tapering of food inflation?
Yeah, that's a mixture of other things, like what I said about palm oil and Indonesia. So yeah, and of course the dampening in oil prices.
How soon should we expect this to see in Nigeria? I really want to see it. I want to go to the market and find that prices have tapered, you know?
I mean, at this point, it's anybody's guess. Inflation is still high globally. Import logistics costs are still at extremely high levels, so we might not see the impact of this immediately, but then it is something that we should definitely feel in the mid to long term.
Mm. Yeah. And then energy prices, is it going to affect it? I don't think so, because Europe is actually looking for alternative. They're looking at nuclear energy now as a source, and of course there's solar and all of that. What else is happening in the commodity space?
Well, metals have actually been tapering. So copper especially has taken a severe hit, but this has of course been due to recessionary fears. But I believe one of our correspondents is coming on to talk about that later.
So I'd rather not go too much into that. Yes. You don't want to cross the lines anyway. Thank you so much, Longi, for making it here this morning. Thanks. Yeah. All right, so that was looking at the commodity space. We'll take a break now. When we come back, we'll still look at the environment, business environment, the economy, and how you can do business and make your business survive in these harsh times. It's on Business Morning here on Channels Television. To join us again. You're welcome back. Well, some of the realities of today's economy is inflation in Nigeria is at 17.71%. Interest rate is at 13%. And this, of course, affects the cost of fund. Tax for businesses totals about 35%. On the other hand, cost of operating businesses have surged. Employment is threatened. We have diesel prices. We have queues at the filling station. Is it possible to build a business in times like this, with these gloomy factors? Well, we have Abiola Adediran. She's founder and managing consultant of Pan-African Social Impact Organization, Midridge International, and she shares her thoughts and experience with us. Hi, Abiola. Good morning.
Good morning. Thank you for having me.
Thank you for making it here. Good to have you. So, this inflation, interest rate, these are some of the realities that we see on paper. Tell us firsthand experience. How is the business environment at this time?
Thank you very much for that question. I dare say to you that the business environment has not been any tougher than we have it right now. Right? A lot of business owners are finding it really hard. I mean, the combination of inflation with interest rates, you know, everything off the roof, Naira devaluation, you know, and then, of course, the petrol scarcity issues, diesel going to its all-time high. I mean, you can't even imagine what a lot of businesses are going through right now. And the truth is that a lot of businesses are at the point where they're literally just defending their bottom line, so to speak. So a lot of people right now are really not like, you know, focusing on making a lot of profit, but can we at least stay in business? Can we at least get things going, get things moving? But the truth is that, you know, economic cycles change, right? And so we find situations where we get into all this double whammy kind of situation, right? But it is the businesses that are resilient, you know, and they're able to build that resilience, that agility factor into their business that actually, you know, will ride the tide, and of course, the good times will obviously still come back.
Yeah, well, they say, and I think I do believe it, I've seen it, Nigerians have thick skin. But as you noted, and it's not just a Nigerian thing, unfortunately, at this time, but we just have our own peculiarities. Absolutely. What would you say has made it peculiar when it comes to Nigeria? The UK, they have recession, they have inflation. In the US, the same thing. Europe is dealing with its problems because of the war going on in Ukraine and trying to wean off Russian energy and all that. What are some of the peculiarities when you talk about Nigeria?
So like you said, right, if you go to the UK, for instance, inflation is also very high. Cost of food prices have gone up. So it's really everywhere, right? But the Nigeria situation is a bit different, or there's just, you know, a little angle to it. And I can say that, you know, our political situation, the fact that, you know, we're getting into an election, we're in an election year and a lot is going on, right, is also one of the things that contributes to all the other things that we're dealing with. There's the double taxation issues. You know, businesses are facing double taxation. Almost as if government is looking for ways to generate revenue from all sources. And so the businesses are now the people that are feeling the brunt. And obviously there's only so much of this cost that you can pass to the, consumers at the end of the day. And even for the consumers, right, their disposable income has also reduced, right? So in terms of even getting more revenue for the business, in terms of making more sales, that has reduced, and then you now see that some of the costs you have to bear as a business, because you can't literally pass everything on to the customer. If you are the kind of business that also runs, you produce products or services that are considered luxury, at this point you would definitely see a dip, because people are now looking at, okay, what are the essentials? Those are the things I need to focus my attention on. So I would say that what has added to the Nigeria situation is the electioneering year, right, and the fact that there's a whole lot going on, right, and with so much money in circulation, you can expect that inflation obviously will peak, right? But also because of a whole lot of other macroeconomic factors that are affecting us, all of this jamming with high rate of inflation, it's a double situation for, the average business owner in Nigeria to deal with. But again, like I said, the way out for a lot of businesses in terms of how they have to manage this is to obviously remain open and agile, just being able to quickly adapt to situations. You have to be innovative in the way, you think about your business. Look at your business model right now, ask yourself what is working and what is not working. And then you have to quickly start tackling the things that are not working. I mean, I do share with business owners that, you have to keep looking at your cost profile, because at the end of the day, the profitability of your business rests solely on, how high your cost is, the cost of operations. So let's even imagine that we keep your revenue constant. Let's imagine that your revenue is not growing. What affects your bottom line at the end of the day is your cost profile. So if your cost is increasing, higher than your revenue, then you know that you're likely going to get into a loss position. And then even the cash flow to even run the business is also another issue, right? So for me, the resilience factor is a thing. Being able to change. This is not the time where you freeze and do nothing, right? Because the situation is that a lot of people can actually freeze at this point with everything that is just happening at the same time. Businesses that depend on Forex, right? And with dollar rates going high every day, there's a tendency as a business owner to just see all of this coming at you and you just freeze. And literally, you're not able to do anything. But this is not the time you freeze, right? This is a time you process the information and look at, what's the impact on the business? Which areas are impacted? What can you do differently? For the things that you source from abroad, for instance, what are the local alternatives that you can explore at this point in time? Perhaps you could start talking to your suppliers to renegotiate your contracts. There's so many things that you can do.
Yeah, I really like for us to get into that, because I wanted to ask you, you talked about cutting costs, at this time. But my fear is it may affect staffing, and that is unemployment looming. We already have that, at over 30-something%. So we already have that. But what are some of the other ways that business owners can cut costs at a time like this?
I think one of the ways, obviously, is embracing digitization. There are lots of things that you probably do manually today that if you leverage technology, you're able to probably cut down some of the cost. And like you said, staff cost is a huge part. If you notice with the mass resignation right now, a lot of our Gen Zs don't want to come to work anymore. They want to work from home, right? So as a business owner, you also have to think about, okay, how can this work in my business? Is this a possibility, right? And if you're able to make people work from home, maybe like maybe 2 days a week out of a 5-day week, that can actually also reduce your diesel cost, obviously, right? So you may have to invest in technology that allows you to still be able to monitor your staff and the work that they're doing and coordinate them offline, right, rather than bring them on site. And then you're burning money, costs on fuel. And then, of course, you can renegotiate your employment contracts as well and say, okay, if we're going to do this and have people work 2 days from home and 3 days at work, perhaps we can also bring some flexibility to the pay as well. So if you earn 200K, but you want to explore these 2 days from home, perhaps we pay you 150K. Does that work for you? So those are other concessions that business owners can definitely explore. I wouldn't say it's a perfect solution, but you definitely have to localize these ideas to your business and see what would really work for you.
And then you talked about looking at local materials, raw materials, for instance.
Absolutely. I think it's a no-brainer for especially businesses in manufacturing and a lot of trading businesses as well, right? We have to look inward right now because we're really being forced to do the things that we obviously needed to have done like 10, 20 years ago, right? And the truth is that if your business is largely import-driven or you have a core part of your raw materials that you source from abroad, the truth is that the higher that is, it increases your cost of production at the end of the day. And if you look at the sales price, the price at which your customers are comfortable to buy your product, and you see that you can't, significantly pass that cost to them, you then have to do something in that equation. You see what I mean? So the composition of your product that is sourced from abroad has to reduce. So you have to find alternatives either way. And then, of course, I feel like business owners at this point should also remain open. Right, look at your business model and see what is working, and be really ready to change, really. Because the truth is that you definitely have to do something to stay in business.
I think one of the things you have said so far is don't freeze.
Don't at all.
Well, there's also the option of backward integration. For instance, I do know that some people who deal in foodstuff, for instance, because farmers, apart from the issue of insecurity, which is really, really big for the country. It's a big issue now. I mean, it's obvious everywhere, even the president's convoy was attacked. So farmers, of course, have been affected by insecurity, but they're also affected by the high cost of funding. So we do know that some foodstuff dealers actually do somewhat of a backward integration. So they do work with the farmers, give them the fund to go back to the farm. I guess businesses can also look at that as an option.
Absolutely. I mean, those are other ways to creatively look back into where is my supply coming from and what are the challenges there. Obviously, farmers are not able to access the kind of funds that they want because the funds come very, very high, very expensive, right? So as part of backward integration is to see, okay, do we have the funds? Can we invest in the farmers so that they farm for us, so to speak? So you get your input from them and you're able to provide the financing that helps them to be able to do it. So the issue of even transportation, you could even cover that and find a way to see, okay, rather than relying on these farmers to bring these things to the market where we buy it and then, they go through all of these challenges because they also don't have capacity to ensure that they bring their goods to the market before it gets spoiled and all of that. Perhaps we can do, create an infrastructure and maybe create some logistics within our business that takes care of that so that you take that burden from the farmers who really can't do much about it. And in an attempt for them to do something, the cost at which the products come to you become higher. So if you can actually bridge that gap by giving them some bridge finance, right, and get into some partnership with these farmers to fund, their production, obviously those are ways by which you can creatively look at the business and see where you can actually do something. I mean, there are things that are still within our control that I feel like we can do. I mean, not everything will be fixed by the government. So you have to look at your business and say, okay, which things are still within my control and which things are out of my control? And then you can take control on those ones that you can do something about.
I guess that's one of the reasons why the B2B model seems to be flourishing now, the business to business. So businesses are looking at what do you have that I can help you with, that the final product will come back to me, thereby reducing my cost, reducing how much you would have sold it to me, and then also reducing my overhead cost at the end of the day.
In fact, the way we think about partnership will change going forward. So you're not going to look at the person that is in the same industry as you as your partner. You want to look at everybody within your value chain, right? People that contribute to the cost of your product and ultimately the price at which you offer it to your consumers, and ask yourself what sort of collaboration can exist here that will be a win-win for both of us. What resources do you have that I can benefit from, and what resources do I have that you can benefit from? And at the end of the day, we're able to do business in a way that we keep our costs, as low as possible, and it's going to be a win-win for both. So I dare say that we have to really think creatively in these times, and we have to look beyond the normal, the things that we're used to.
And you talked about tax the other time. No, I don't think anybody's really happy to pay tax, except you're compelled to do it. But of course, at this time, it should be expected that governments would face the reality, which is that the business environment is harsh at this time, and try to help businesses. But in the UK, for instance, they're talking about windfall tax. Do we have any business that is taking advantage of this time that we could tax, and do our own windfall tax?
Interestingly, I feel like, this is the responsibility of government to really be able to, look at our legislation and let it really just follow the trend of things. Like you look at the microeconomic circle and you're really using the fiscal policy to really enable economic activities. I would imagine that at this time where things are generally very tough, right, is a time where you would introduce something like tax-free days or tax holidays and that sort of thing, right?
But the government also needs money.
They do, right?
How do we balance that out? The government is borrowing. Do you understand? So
That's
they
the
do
issue.
need money to run the country. And Nigerians do not think it's time to let go of subsidy. So that is a huge cost. An addition to Nigeria's debt. So, the government, I think they're also fixed.
I know, right? And I think that is the Nigeria effect. When I say there is a peculiarity to the Nigerian situation, right? We are largely a consuming country, right? And that really means that even the government itself, in terms of where it generates its revenue from, it's largely from taxes, apart from, the dependence on oil and all of that. So there's a bulk of the revenue that funds government that comes from tax. And so if they're not even getting that money, there's no other way they're getting the money because they're already borrowing, right, and all of that. So I do say that, it's just a situation that we're in, and I would imagine that the government is also looking at this and saying, what can we do? Because we have to keep economic activities obviously ongoing to ensure that even the GDP is not affected at the end of the day.
Well, you painted, I think, kind of a picture where it seems, let's make the most of what we have, and we might actually find out that there's some goods in these hard times. For instance, if Nigerians' taste, which is very foreign, foreign colored, we're more comfortable with imported stuff, things that are not made in Nigeria. If these times could maybe push Nigerians to look inward, including the government. I know I was listening to a documentary recently, and they were saying, for instance, the NYSC uniforms, the army uniforms, why can't we get, even if it's those in the correctional service, a lot of them, they are schooling. The last time I visited Ikoyi correctional service, they are schooling, they are learning skills. Why can't they be engaged, to handle some of this, and then that will reduce the foreign exchange or the pressure that we put on Naira because of foreign exchange. So actually, there might actually be some goods, coming out of all of this.
I agree with you. I agree with you because I feel like in every tough situation, right, is also opportunities, if only we're able to identify them. Right, in a situation where there is so much dependence on import, and of course you can see the pressure that puts on on forex, and then of course consequently the Naira devaluation. Right, I feel like this can really force us to start to look inward and make our made in Nigeria products now more trendy and things that people would embrace, right? If we embrace more of our made in Nigeria products that are sourced locally and are done by people, made by manufacturers locally, we're able to stimulate the economy. So the issue of unemployment, is taken care of, right? The issue of, so much dependence on import and then the need for forex and all of that, we can, deal with that a little bit. I don't see the entire, it's going to take a while, really. It's going to take a while. But I do believe that, if this situation can force us as individuals, as business owners, as collectives, as even government, to come up with initiatives that really favor made in Nigeria products and promote them. I see a lot of export even going out of Nigeria these days. I see the export agencies also doing a lot of sensitization awareness.
Yeah, NEPC,
yes, NEPC is actually doing, they're doing quite a bit, helping small-scale business owners to make their product exportable, right, and just give them the right education. So there's a whole lot that we all can do. It's not only the business owners, but other agencies that can sort of support these businesses and make them ready to be able to export their products.
Yeah, that word you said, exportable, actually catches my attention, because the other side of this conversation is people will ask about the quality of what, is being produced in Nigeria, for instance.
Absolutely.
You want to wear clothes, you want to wear shoes, the food you eat. I met someone who sells popcorn, and she actually imports her corn. And I felt heartbroken because we have fertile land, we have the weather, why can't we? And she says that it's the little details that's missing. So even though we have the corn, the processing, maybe you finish and then there's sand, you know, and things like that. So if you buy her popcorn and then you taste sand, you won't buy it again. You check out the brand and you don't go back again. And she doesn't want that. So I think it's also for attention to be given to the quality of these products if we really mean business in doing this. I mean, we've invited Standards Organization to the show a couple of times and we've not heard from them because a lot of this actually lies on their shoulder to ensure that the right process, the right quality is followed through for us to have an exportable product, as you said.
I agree with you. I feel like, you know, the quality control process or the systems that we've put in place to ensure that, you know, what is coming out of our production, what is coming out of all of that is of the right standard. It's something that needs to be looked into, right? And I feel like, you know, a lot of encouragement to business owners to also be able to make their products something that can compete on the global scale, right, will force them to maybe make some investment in that. But again, there's only so much that individuals can do. I feel like the government definitely has to do something. I mean, the government agencies, the SON and the likes, you know, to put a lot more attention, right, to this quality process, because the truth is that if we're able to produce products that can really stay at par with all the other products that we import, I mean, there's no need. It wouldn't make sense for you to go buy something that is more expensive because it's imported. And you can see, you know, another one, an alternative that's made in Nigeria that can do just about exactly the same thing, if not better, right? So if we see better alternatives, or at a minimum, let's even try and meet the standard that is already out there, we can do a lot and help ourselves in Nigeria.
Thank you so much, Abiola Adedinran, Managing Consultant with Midway International. But I think one major takeaway is, please, business owners, don't freeze. Thank you so much for your time and sharing your thoughts with us.
Thank you for having me.
All right, so we'll take a break now. So please, business owners, don't freeze. Just keep on moving and you will meet, you know, an opening somewhere in front. At least that's the message we have from Abiola here. But we'll take a break now. When we come back, we'll head to the markets. This is Business Morning on Channels Television. Welcome back. You're still watching Business Morning on Channels Television. Well, unfortunately, the bearish sentiment continues at the equities in Nigeria. Will has the details. Hi, Will.
Hi, Ine, good morning.
Good morning.
Bearish sentiment. I come bearing
Third straight day.
Yeah, 3 days straight now, and the equities market is not letting up. It's not giving any sign of green pastures. As I mentioned yesterday, I thought I would have green pastures when I came in, but it's not looking like it. You know, it closed lower for the third straight day, as you mentioned. Profit-taking activities continue. We saw almost a 1% drop in O&O yesterday. International Breweries was also down. GTCO, Union Bank was down almost 9.8%, and that's what, you know, pulled back the market by 0.06%. All share index is at 51,556.54 points. And the equity cap still at the 27 trillion naira mark. Hopefully, we don't drop below that level. Now, month-to-date loss was unchanged at 0.5%, as I mentioned yesterday. But the year-to-date gain has moderated to 20.7%. Now, we're still, you know, doing well in that regard. The total volume of trades yesterday was really not was not impressive. We had 135.26 million units of shares traded, valued at 1.4 billion naira, and transacted in 3,745 deals. Transcorp was the most traded stock by volume. GTCO followed UPDC. GTCO also was the most traded stock by value, owning that position for the second straight day. Performance across sectors was also not impressive. Almost all key indexes were down: banking, consumer goods, insurance, and except for the industrial goods counter, which closed unchanged from the closing figures on Tuesday. Now, market breadth was a very close call there. We saw 17 gainers to 16 losers. Very close mark there. Well, we will move on to the bond space. We see that the bond market was bearish yesterday. When I say bearish, that's the yields were trending upward. You know, we saw a 3 basis points rise for the bond space to about 11.2%. Now, across the benchmark curve, the average yield expanded at the short end as investors sold off, you know, the April 2023 paper, but was flat at the mid and the long segment. But to give us more details about that, we have Caleb Alimi, fixed income dealer at FSDH Merchant Bank. Good morning, Caleb.
Good morning, Will.
Caleb, we have seen so much happening in the fixed income space, but how much has the system liquidity, how much impact has it had on the activities in the fixed income space?
It's fair to say that the entire activity right now is being driven by system liquidity. Banks have consistently struggled towards the tail end of last month and early period of this month, you know, with the liquidity crunch. System liquidity has been consistently in negative territory. Once in a while, you know, it's out of that and then we go back to that. That has largely impacted on activities in the fixed income market. The treasury bill space, we've seen week on week nearly 600 to 700 basis points increase at the short end of the curve, with the papers maturing between July and November, all trading northward of 10%, from levels of around 4%, 5%. To their current levels, and that's largely driven because of the liquidity situation. Banks have to fund, you know, FX auctions tomorrow. Banks have all sorts of obligations to fulfill, but the system liquidity is just so tight that they have to sell off available treasury bills to provide for this. We've also seen that, you know, begin to impact on the bonds market, as you saw that short-dated bonds and select long-dated bonds also all trending upwards. We expect that to continue until we have significant inflows from maybe coupon payments and possibly a CRR credit from the CBN. That would ease things up.
Okay, so you mentioned that system liquidity is driving the activities and that's made yields trend upward. But how much of that is the fixed? You know, we've seen also that the CBN during the last MPR, they raised key interest rate to 13%. Is that not having any impact, direct impact on yields? Is it just the tight liquidity system that is pushing the yields upward? Could you give more light on that?
Absolutely, you're correct. It's just the tight system liquidity that is driving yields upwards. The CBN made a move to raise the MPR by 150 basis points. We didn't see a significant impact on the market because market was still liquid and there was still sort of like a dearth of securities to purchase. But right now there is absolutely negative liquidity, so to say, and banks still have to meet the obligations. So it strictly has nothing to do with the MPR, strictly system liquidity.
Okay, so it's still, now the CBN special bills has seen some form of sell pressure, intense sell pressure for the past couple of weeks now. What's driving this?
Again, it's liquidity, right? Banks are sitting on these bills at ridiculous levels, and then they're having to fund at ridiculous levels as well. So the papers were issued to the banks at a maximum rate of, say, 0.6%, and banks are having to fund themselves at interbank market at 10%. You know, so why hold on to these papers at 0.6% and fund from interbank at 10% when you can sell off all those papers and, you know, create that liquidity for yourself? That is what is driving the intense sale for those special bills.
Wow, so system liquidity is the dominant factor here now. So what's your outlook for the rest of the week, and particularly for next week?
So today there should be a bit of respite, just a little bit of respite, in the sense that we expect a retail FX refund, part of the auction that held last week. Some of it, you know, CBN doesn't allocate all of it, so that portion will come back into the market. It should just give us a little breather. It's nothing compared to how much we'll be funding for tomorrow. So we'll just have a bit of breather today. Going into next week is clearly a short week. We don't see any significant inflows into the market next week, except I think there's a little bit of OMO maturity, which is not significant. So we think the system liquidity crunch will persist into next week, and will probably begin to ease from the upper week when significant coupon payments begin to be made.
Okay. Thank you so much, Caleb Alimi, fixed income dealer, FSDH Merchant Bank, for that insight on the program. So, Ini, that's what we have for the markets, fixed income space, tight liquidity, equities markets, bearish movements, red. We're hoping that it becomes green.
Yeah, well, we'll keep our fingers crossed for that, Will. Thank you so much.
Definitely.
All right, we're still doing markets now. Before we go to the crypto space now, which I do hope we'll have a little bit of green, because it doesn't look very much like that, especially when we see what's going on around the world. Inflation has not tapered. and neither has interest rate. And everything is connected in the world that we live today. After all, it is a global village. Well, Ladi, do we have any green looking?
It's a green day actually, and we're seeing extreme fear still an improvement from what we've seen for the past few weeks. You know, around 10, 11 points. We're still at 18. You're showing some improvement when it comes to.
So is that green or just a sign that perhaps there's a little bit of reprieve?
It's a sign that there's some confidence, you know, with traders. They're trying to get back in, see if they can make some profit in this market, which is extremely difficult, you know, at this time. You know, it's risk off, you know, with major markets. We see the market cap, they're inching up by 1.68%. Volume traded is down this morning. It's down about 17.84%. We see Bitcoin dominance there sitting at 42.38%. And we see Bitcoin holding strongly to that $20,000 mark. Is up 1.15%. Volume traded $22.73 billion in Bitcoin. And we see Ethereum there looking pretty good this morning, up 3.07%. Volume traded $13.78 billion. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide.
Yeah, hello, Ladi. Green Thursday.
Yeah, great green Thursday, because normally we see, you know, sell-offs, you know, Thursday into Friday, but I cannot, you know, say for sure that we're not going to see sell-offs today. We know how this market is, you know, volatile. Olumide, what are you seeing?
Yeah, I share the same sentiment, but we need to give credence to the bulls. Bitcoin is riding over $20,000 for 3 days in a row, and that's pretty much based on many metrics. We are seeing risk on mood across investors peaking on their priced assets, and pretty much we're seeing PNB rallying above $235. We're seeing Solana going above $35, and we're also seeing Avalanche posting decent gains. So pretty much it's been a very pleasant week averagely if you compare to the past couple of weeks. But having said that, you know, concerns still remain in the market. We've seen major crypto lenders filing for bankrupt or suffering from liquidity crunch, and that has somehow dampened the cloud. So it's very unlikely to see Bitcoin breaking above the $22,000 until a clear respite on U.S. inflation data suggests that inflation is coming down. But still at that, you know, investors still remain very picky, and that's why you see the greed fear index still at 16.
Right, and it's still extreme fear in this market. We've seen, you know, Bitcoin have the worst, you know, second quarter since 2011, and the whole of the first half of 2022, nothing to write home about when you talk about Bitcoin price and most of these other assets. What do you think is next?
Yeah, I think I shared the same bias in the third quarter, the third quarter and the fourth quarter particularly. I know fully well that the U.S. Fed has highlighted the fact that they will continually fight inflation aggressively, and that will definitely bring some liquidity crunch. But having said that, you know, great adoption seems to be helping the crypto market. Excitingly, we're seeing CZ coming to Senegal. This is the co-founder of Binance, coming to Senegal, Cote d'Ivoire, meeting with crypto stakeholders, and that has somehow created excitement in the continent. So despite the fact that we are seeing moderation in price action, the fact that adoption is increasing might really outweigh Bitcoin's bleak forecast. So it's most likely Bitcoin might not suffer what we saw in the first half, where it dropped about 50% year to date.
It's quite interesting seeing the focus, you know, on adoption instead of price action. But we still have that U.S. jobs report coming tomorrow. That's still going to weigh on the market. So it remains to be seen what happens with all these markets. Thank you so much, Olumide.
Yeah, thank you so much.
All right, now looking at the top most of market cap, we see it's mostly green on that counter. We see BNB there, $236. We see eCash, the only downer this morning. XRP, 33 cents, up 2.73%. So it's not looking bad this morning, but we still have to watch out, you know, for
Friday
the evening.
Friday is the dreaded day, you know.
And Friday.
Friday is the dreaded day.
Exactly.
If we can come through Friday, I think, well,
yeah,
we'll be a bit,
we might have a great weekend.
Yeah. Thank you so much, Ladi.
Thank you.
So that's it on the program. The Thursday edition. We have the final one tomorrow for this week. And then, of course, we have Business Incorporated coming at 1:30. Will Ibong will be back for that. I'm Ini John Mekwa, wishing you a beautiful day ahead.